All right, so trying to put together some content for the site and for future use. I think really for people to understand Urso Capital, you kind of have to understand the story behind myself and Lisa and where we started and how we got to where we are today. I think it's really important. So first and foremost, I think a lot of our values really stem back to the first real estate deal that we ever did and how we got into real estate. So graduated Manhattan College in the year 2000. At the time, I was living in my parents' basement and commuting to New York City, working for a good friend of ours from college who was in a litigation support and document management business. I had come on to help run the operations. It was a small company. At the time, there was only about 10 employees. I went on to stay there for 7 years until we started Urso Capital full-time. That business ultimately sold. But going back to the first deal we ever did, somebody handed me a book, a buddy of mine, to read on the train. It was called Rich Dad, Poor Dad. And I read the book, the first day, read it 10 times over again, and gave it to Lisa. She read it, and we both the biggest takeaway was, this real estate thing sounds really interesting. I gravitated towards the fact that you can, go out and create a deal and hunt for a deal, put it together, structure it, and then it would generate income and you would create value over time. So started talking to some folks, that we knew, asking around if anybody was involved in real estate. Ultimately was introduced to a gentleman who had put together a team in Paterson, New Jersey, and they were buying 2 and 3 family foreclosures, basically cleaning them up, renovating them, and then they were working with the city to place Section 8 tenants in there. And then they would sell the properties once they were rented, renovated. They would sell them to basically an investor, an operator. So after going out to Paterson, 21 years old, basically every Friday and Saturday, oftentimes with a pretty big hangover, after about 6 months, he came to us and said, "Hey, Chris, you've been coming out. You seem really focused. We have an opportunity here for you to buy a 2-family. It's a really good property, good numbers on it, and it's $245,000. Now, I just graduated college. I didn't have $2,000, let alone $245,000 or, even enough for a down payment. So my parents, as a graduation gift, were going to pay off the one student loan that I had. I think it was about $23,000 or $24,000. And I convinced them, I sat down with them and said, listen, instead of paying off the loan, I want to take that money and go put it down on this opportunity that I have and go buy a 2-family rental property in Paterson, New Jersey. So obviously all the concerns came about. How are you going to do this? We live in Long Island. The property's in Paterson, New Jersey. What if a tenant slips and falls? What if there's a fire? What if this? I finally looked at them and said, listen, what if I get hit by a bus tomorrow? This is something I want to try. I'll take over the payments. I think the payments were about $179 a month on the student loan. And then I'm going to buy this property, and after mortgage and expenses and operations, it should clear me about $700 a month. And Lisa and I went out, and we had a lot of challenges. We had attorneys tell us no. We had lenders tell us no on how we wanted to structure it. But we kept pushing, and ultimately we got that deal done. And that was really our first taste of real estate. From there, I continued to work at Skyline, the company that I was with, and Lisa was at the New York Federal Reserve Bank, and she had moved into the city and decided she wanted to go into real estate full-time. She applied for the master's program at NYU. She got her brokerage license. We had gotten to know other investors in Paterson. We then went out and started finding our own deals in Paterson and brought them to our original guys and said, hey, I found a deal. Do you guys want to put the money up? They would put the money up. We'd oversee it. We'd split the profits. Lisa was selling other properties to investors, paid her whole way through NYU, which is pretty amazing. Then 2007 came, and we had probably done about 5 deals in the course of those 7 years. And at 20 to 27 years old, we would make $40,000, $50,000 on a sale, $80,000. That was a lot of money, and then generating cash flow off the rentals we were holding. It really taught us just a great lesson, on how to buy for value, create value, how to generate income. And in 2007, the company I was with was going to be sold, and I had worked myself into a tiny bit of equity, and we had to make a decision. Either I was going to stay in that business, probably for the rest of my life. If I was going to make any meaningful money, I would have had to commit to staying on board and really seeing the growth through for the next owner. But Lisa and I decided we wanted to go into real estate full time. All we really knew was residential real estate, so we started to look around, network, go to events, started to learn other markets outside of New York because we didn't really have a lot of cash. And then the GFC happened pretty quickly thereafter. When I was a young, budding real estate entrepreneur, the GFC comes and Bear Stearns collapses. Bernie Madoff's on the front page of every local newspaper, national newspaper, and I'm a young guy trying to now raise money to go buy houses, cheap houses in Cincinnati, Ohio. That's the market we ultimately landed on as a market that had a lower entry point. It's pretty stable, had the most Fortune 500 companies per million people in any MSA at the time. And we started buying these cheap houses in early 2008, all the way through, mid to end of 2009. We ended up buying about 60 homes, and these were really low-end, $15,000 and $20,000 houses. We had assembled a team. We had a great local partner that worked with us, oversaw renovations, assisted with management. I was down there literally every single week for those 2 years, and then starting to feel like we were getting a little bit burnt out and spinning our wheels. We're doing all this work on these $15,000, $20,000 houses to clean them up, rent them out, and ultimately try to make a $7,000, $10,000 profit when all was said and done in 6 to 7 months. And my big goal at the time was to build a business that could get to $100 million of assets. Right? Meaning the asset value of our portfolio would be $100 million. And I had a coach at the time, and, I remember going through the goal and saying, let's do the math here. We would have to do something like 1,200 houses, give or take, to get to that $100 million threshold at the prices we were buying deals at, with the type of product we were buying. And that looked super daunting. So we basically came up with the conclusion, hey, we're learning the residential rental business via single family. Why don't we start to look at multifamily? And, it seems to make a lot more sense. You have, one property. We have 40 apartments, under one roof. So we basically sat with our team and said, hey, guys, we want to keep working with you, but we don't want to see any more houses. Let's start to go out and hunt for some buildings. So within a matter of weeks, this was probably about September 2009, they brought us a vacant 40-unit foreclosure in a very rough part of Cincinnati. It was in the Incline district of Price Hill. For those of you that know Cincinnati, back in 2009, that was a really dicey place to be. And the property was, I believe, $245,000 to buy it. $245,000, $250,000 for 40 units. And we had walked it, came up with a budget, and figured we needed roughly about $200,000 to clean up all the apartments, to get them functional, to get them rentable. And our target rents were, I'll never forget this, $450,000, $550,000, and $650,000 for 1, 2, and 3 bedroom units. So we put together the plan. We closed on the property in December of 2009. We got to work immediately. I was very, very involved in every aspect of the renovations, picking out all the materials, on the phone with contractors daily, down there weekly, spending multiple days a week there. And within 9 months, we had gotten the property cleaned up and to 100% occupancy. We had a heavy Spanish contingent we ended up building off of via friends, family, referrals, etc. We really created a clean, safe, affordable place for people to live in that area where they felt good, and then they began to start to tell their friends and family about it. And we did that with no leverage. We raised money from friends, family, anybody that would listen, had a heartbeat and $10,000 willing to invest in us. And we put together $450,000 of cash. And the property, I'll remember our first full year of operations, I think generated about $80,000 of free cash flow. And from there, we really kind of started to understand the benefits and the power of investing in multifamily, and how to really create value, over the long term through true fundamentals, right? Not just buying something today, hoping to sell it for something more tomorrow. We took something that was non-performing, invested the capital, invested the sweat equity, invested into the operations, invested into the community, and created a true cash generating business, for lack of a better way to put it, that happened to be real estate. And that's one of the things that we really fell in love with about multifamily, is that each deal is like we're truly buying a business at the end of the day. Except our customers are our tenants, and our product is our community, our complex. So from there, we went on to buy one more foreclosure in Cincinnati, which was 23 units we bought from Wells Fargo, I believe. And we paid $750,000 for that. We raised money for that as well. I had basically no money at this point. We used whatever cash we had to basically survive, and keep the lights on. Lisa had opted to go back to work at this point. She was commuting to Jersey City, consulting at a very large French investment bank on Fed reporting projects. I thank God for that, because that really helped alleviate a lot of pressure at the time. And we ended up buying another 37-unit property on the Kentucky side of Cincinnati with beautiful views, and that was probably one of the funnest projects that we ever did. We bought that for about $1.1 million, and ended up renovating it, put about $200,000 into it. And then we started to branch out and look outside of Cincinnati, northern Kentucky, for markets that had greater opportunities, greater growth opportunities. And after doing a bunch of research, we ended up in Charleston, South Carolina. And that was really our first entry into the Southeast. We spent about a year in Charleston, going down there frequently, learning the market, meeting people. At that time, Charleston was a very different place. The new airport wasn't there. The growth story wasn't there yet. It was very early on. Boeing had just come in a couple of years prior to, but they only had one facility up at the time. And, most everything was locally owned or regionally owned. Long-term owners, and I'm a young, Italian guy from New York coming down to Charleston, trying to penetrate the market. It took some time to build the trust and build the relationships. And ultimately, after about a year of going down there, we had the opportunity to buy a 280-unit 1970s vintage, I would call a pretty distressed deal. 25 down units, meaning they haven't been online since Hurricane Hugo. I think we put together about $3 million. We got a bank loan for about $6.5 million. And we had a pretty massive renovation program and business plan to put into play on this property. And we executed, intensely. Over the first 12 to 18 months, we moved in several police officers with free units, renovated the exteriors, fixed all the down units, updated the amenities, evicted all the problematic tenants, and ended up filling the place back up to about 95%, increased the rent significantly, and ultimately sold the property. I believe we were into it for about $9 million, and I want to say we sold it for about 12 and a half-ish, give or take, in a matter of 24 months. So we doubled the investors' money in 24 months. We made some money, and then we were off to the races in Charleston. We went on to accumulate a meaningful portfolio. At one point, we were the top 5 largest owners of apartments in the Charleston MSA. I think we had over 1,200 units collectively. And Since then we've gone on to acquire over 4,500 apartments acquired throughout the Southeast. Value add about 26 deals, of which we've sold 21. And we're also now, we added new development to our platform in 2019, and we're on our 4th development project, which will bring us to over 1,000 units that are ground up development. Our focus remains in the Southeast, in the Carolinas, North South Carolina, Middle Tennessee, Nashville area. We really like the entire state of Tennessee, certain MSAs from, Nashville MSA, which is a big MSA. Covers a ton of submarkets. Knoxville we think could be interesting. We love Charleston. We want to get back into Charleston. We love the Charlotte MSA, Raleigh-Durham. So we've really remained focused. Our portfolio is now the smallest it's been in many, many years. We're down to just 5 assets in our portfolio, with 3 of those being new construction, 2 existing assets, and 1 under construction. So that's our story, and I hope you enjoyed it. I know it was a little long, but we've built a great business. We've built great relationships. Many of our investors have been with us, since our very first deal, and that's pretty rewarding to have a lot of friends and family that kind of stuck with us. And then we've been fortunate enough through some great relationships that we built awesome, meaningful relationships with some very high net worth and ultra high net worth investors that really have helped propel our growth over the last 3 to 5 years. And we're looking to continue to expand our relationships. We think there's going to be some great opportunities ahead. And, we would love the opportunity to get to know you. If you're not an investor with us, please feel free to reach out to Rebecca at urscapitalpartners.com. And thank you. I appreciate it.